Hey everybody, it's Elizabeth Rose. I wanted to let you know that today Jeremy Powell spoke in front of the House Financial Services Committee. That's like a mouthful. If you don't know who Jeremy Powell is, he is our new Fed Chair. And today he talked about the state of the economy and what he sees everything looking like. And one of the things that he said was that he expects the economy to continue strengthening, and it did grow at a solid pace for the second half of last year as well as into this year. So he said, he was actually quite hawkish, and he said that he feels that the rate hikes will accelerate, not just continue, but accelerate. So he's basing this off of the strengthening economy, jobs. He spoke to that today. He talked about they continue to improve. The unemployment's improving, and he does even expect some wage growth this year, which is nice for those of us out here working for a living. It's nice to hear that. And then inflation, it's low and stable, at least in his opinion. And certainly the Fed has been trying for quite some time to spark some inflation. It's been slow to come about, but it's low and stable. But here's what we know, and this is like tried and true. You can take this to the bank. As inflation starts to heat up, you can expect mortgage rates to increase. They're going to move higher. With the Fed hikes, you got to keep in mind Fed hikes and mortgage rates are not the same animal. Now, mortgage rates may respond to what the Fed does, but when the Fed hikes rates, that's not mortgage rates. Mortgage rates are going to respond to inflation data. So right now, inflation is moderate, although we did see a little bit of heat in the last report. When you strip out food and energy, it wasn't quite as bad. And why do we strip out food and energy? Well, the Fed's mandate is to keep inflation under control. And they can only keep under control the things that are controllable, right? So you can't control Mother Nature. And Mother Nature affects energy prices, and that also affects food prices. So that's why they stripped that out. So anyway, we can expect, apparently, according to our new Fed Chair Powell, we can expect the Fed to hike more this year than perhaps they've been alluding to or talking about. So it's going to be interesting to see what happens. The market did take a little bit of an ugly dive today. Luckily, we finished up the day where it wasn't like quite as terrible as it could have been. But just know that right now we are in volatile times. Speaking of volatility, Powell also said that he's not really all that concerned about the volatility that's happening in the stock market. So, and most people really aren't. I mean, that's the nature of the stock market. It has days and weeks and months like that. So anyway, as a whole, just expects more pressure on prices or rates to move higher. An improving economy means hotter inflation. As inflation heats up, mortgage bonds are going to heat up. And also with the improving economy, people tend to jump out of the safe haven of bonds and move over into something a little bit more riskier, such as stocks. When you have that exit strategy going on, you also have a deteriorating bond market and mortgage rates moving higher. The other thing that we are dealing with this year, and it will continue, is the Fed is exiting the purchase or repurchase of mortgage-backed securities and treasuries. So as they continue to dial back their purchasing, that means there's less appetite in the market. There's less buyers in the market. With that, we're going to see that's going to also lend itself to move higher in mortgage rates. So that's kind of where things stand right now. It's not doom and gloom, though. I still think mortgage rates are fantastic, and even as they edge up this year, they'll still be fantastic. And housing in the Dallas-Fort Worth market is phenomenal, if you can get one. That's the biggest challenge, it seems. So I know that there's been a lot of price appreciation, but we still have so much more room, and that's probably not what you want to hear, but we do have more room for growth here with all of the jobs that are coming in, with corporate America moving here and finding so much attraction to our state. So anyway, it's a good time to be in the market for a house. Rates are still low, even though they are moving higher, and home prices are moving higher, but they're still very attractive compared to other parts of the country. So the economy's rolling along, and hopefully we'll all get a raise here pretty soon. So if you have any questions, please give me a shout. Love to hear from you as always. And that is my take on the market today as we know it. Have a great day.